In a YouTube clip, the Bank of Canada laid out how the country's economy could collapse from a housing crisis. Let's watch.
At the Bank of Canada, we think of financial stability in terms of vulnerabilities, that's potential weaknesses in the financial system, and risks, which is when those weaknesses become real. There are two vulnerabilities related to housing that we are focused on right now. Households that are carrying a lot of debt, and imbalances in the housing market, such as house prices rising at an unsustainable rate. People can often cope with these vulnerabilities for an extended period, but an economic shock, such as a severe recession, could trigger a negative chain of events. We could see a sharp increase in unemployment. Many households would be in a difficult position, especially those with a high debt load. They could have trouble meeting their debt payments. Some households would likely default on loans. This would affect lenders such as banks and trust companies. When a default occurs, the lender tries to recover the value of the loan by foreclosing and selling the house. At the same time, other households are likely to delay house purchases until the economy improves. In a housing market that is already vulnerable, this pressure could cause a large drop in house prices. A decline in house prices would push down household wealth, possibly reducing spending. Broader economy would also feel the impact through stress on both large and small lenders who would need to reduce their new loans. The good news is that stress tests show that the big Canadian banks are able to handle even a large drop in house prices. Still, the impact on the broader economy and on the financial system would be significant. That's why the Bank of Canada regularly monitors and reports on these risks and vulnerabilities in the financial system review.
So what the gentleman in that video is saying is basically that households are carrying a bunch of debt and the housing market is going sky high. Now, it's generally not a bad thing to have a lot of debt if it's the type of debt that will bring you economic fortunes in the future. However, right now, given our overinflated market, these houses are bound to collapse at any time. And the reason this is problematic is because if your mortgage is, let's say, $800,000 and the price is going up, which is a good thing, but once it crashes and your mortgage is now, let's say, in an extreme example, drops to $100,000, not only is your wealth significantly deteriorated, you're left with this massive mortgage to pay off to the bank, while at the same time, as a result of this massive crash, there are mass layoffs all around the country, and maybe you lost your job, and you have to pay all this money back to the creditor, the bank, while having no job. That's the reason why the Bank of Canada has come out with this very cautionary news. Now, another reason why it's very problematic is because this crash that happens, it won't be resulting from irresponsible banking practices. In fact, Canada has very good banks, very responsible. They're well regulated by the government and whatnot. So that's not the issue. The issue is Canada is very much prone to greater macro environmental forces. And what's one great macro environmental force that could, very much trigger this type of housing crisis? Well, a crash coming from the United States. As you noted in my previous video, the things that led to the 2008 crisis had not been addressed. For one thing, the United States banking sector has not been effectively regulated. Household wealth has been steadily declining over the past several decades in the US. Stagnant wages, very fragile job market. Job security is arguably inexistent. So there are several reasons why this crash is going to happen in the US. And when that crash does happen, Canada is definitely going to feel that. You know, we can't even get to 1% economic growth. All the jobs created here are part-time, really crappy jobs. So all we really have that's keeping our necks above the water is an overinflated housing market. And once that market pops, our entire economy could potentially burst into flames, which is what the Bank of Canada is saying in a more polite way. Now, what's really interesting to me is that the BC government has basically ignored this economic wisdom by instituting schemes that help first-time home buyers just get into more debt instead of maybe introducing some sort of policy that maybe helps Canadians manage their debt, like maybe providing student debt relief. That would be a good thing right now. But they're not. They're completely ignoring the Bank of Canada and doing everything they can to keep this artificial housing market looking strong. However, it's inevitably going to fail. In fact, there was a really interesting article by Canadian Business, and they shed light on many parallels of pre-crisis US and where Canada is right now. Quote, the home ownership rate is 69%, about where the US rate was when the market crashed in 2007. Total household credit topped $2 trillion for the first time in the first quarter, pushing the ratio of debt to disposable income to a record 167%, according to Stats Canada. Personal debt is rising faster than household income. The Bank of Canada says the level of household indebtedness has left the country vulnerable to a shock, just as the US was in 2008, when the investment bank Lehman Brothers collapsed. They make this important caveat, however. Canadian banks are solid, but its economy isn't. Gross domestic product will do well to expand 1% in 2016. Even if the worst case scenario is avoided, all that debt will still weigh on Canadians' near-term fortunes. So, I guess in a more eloquent way, basically said everything I just said. You know, stagnant wages, pathetic economic growth, overinflated housing market. It's a recipe for disaster. And what's even more dangerous is that people all across this country are kind of just putting their fingers in their ear, and I don't know if they're going by their gut feeling, and they just assume housing will always be a safe investment just because that's been the case for boomers over the past several decades. Well, you know what? We're entering a brave new world. That may not be the case right now. And you know, the Bank of Canada, for them to make a YouTube clip to get people's attention goes to show you that it's a pretty serious thing. Most of their YouTube clips are, you know, some clip of the governor talking about like just the macro environmental world. But in this case, they made, as you saw, a clip in very simple language outlining the state of the economy right now. And in my opinion, should not be ignored. Yeah. Crazy times. And the fact that we have governments in this country who are completely ignoring these facts goes to show you that no one knows what they're doing. No one has a clue what's going on. And I'm not saying I do. I pay attention to institutions like the Bank of Canada, and I provide my thoughts on it. That's all I do. I'm not an expert. Governments in this country have a wealth of knowledge and information that I don't have. But I find it pretty dangerous that they're instituting policies as if they don't have that wealth of information and knowledge. We have no plan. And it's not just us, by the way. It's the entire world. No one knows what they're doing. Instead of, creating actual sustainable growth, we live in these bubbles of booms and busts. Notice how there's a crash pretty much every 10 years now. And no one knows what they're doing. This next crash, we're going to get all our teeth knocked out. Because when you have an economy with no real foundation, it's artificial growth. The end result is always catastrophic. We saw that we're exactly where we were in 1929. All these new product innovations matched with massive amounts of income inequality. People think things are going great. And then when the economy collapses, what did we have? The Great Depression. And this isn't just my, idea. That's what a lot of economists are saying. They say this could be worse than the Great Depression because it's not just Canada, the US, and Europe involved. China's going to be affected by this. Japan, everyone. And don't take my word for it. Read those articles, which I'm going to post below. They will give you all this information in detail. Now, I hate to post this, right after Christmas, but I think it's important, and I think everyone should be approaching the housing market with extreme caution. Now, if you have any additional value you'd like to add to this video, please write a comment below, like and subscribe, or as always, even send a response video. But that's it for today. Thank you very much.